What if you could buy shares in a South Korean semiconductor giant or a Hong Kong-listed corporation from the same app you use to hold Bitcoin, without opening a single brokerage account? As of today, Wednesday the 22nd of July, 2026, that is no longer a hypothetical. Kraken's parent company Payward has officially expanded its xStocks tokenized equities product to cover Hong Kong, United Kingdom, and South Korean equities in a single coordinated rollout. This is not a limited pilot. It is a simultaneous launch targeting 3 of the world's most significant capital markets. For context, the Hong Kong Stock Exchange, the London Stock Exchange, and South Korea's Kospi collectively represent trillions of pounds in listed company value. Payward entering all 3 on the same day is a statement of intent that the traditional brokerage industry cannot afford to ignore. Today we are breaking down exactly what has happened, why it matters, and what it means for your money. Before diving into the specifics, it helps to understand what a tokenized stock actually is. A tokenized stock is a blockchain-based digital token whose value tracks the price of a real, publicly listed company. When you buy through xStocks, you are not purchasing a share directly on a regulated exchange in the traditional sense. Instead, you hold a token backed by real shares held in custody by a regulated custodian. The value rises and falls with the underlying equity. Payward's xStocks product is built to make this process seamless for crypto-native users, allowing them to gain exposure to global companies without needing a separate stockbroker, a foreign currency account, or knowledge of settlement systems in other countries. The key distinction between tokenized stocks and synthetic derivatives is that the underlying shares actually exist and are held on your behalf. The advantage is access. Markets that were previously difficult or expensive to reach become available through one unified interface. Central to today's rollout is the partnership between Payward and GTN, the global trading network. GTN brings deep institutional connections to equity markets across Asia and Europe, while Payward contributes the crypto-native infrastructure and an established global user base. The 2 companies announced the collaboration specifically to expand access to global capital markets through the xStocks platform. This kind of partnership is increasingly common at the intersection of traditional finance and crypto, but the geographic ambition here is notable. GTN's Asian market expertise is directly relevant to the Hong Kong and South Korea components of this expansion. Without a partner with existing relationships in those markets, building compliant access to the Hang Seng or Kospi would be significantly slower and more complex. For Payward, this deal accelerates a strategy that has been building since at least early 2026, when Forbes described the company as systematically collapsing the wall between crypto and stock markets. Today's announcement is where that strategy becomes concrete. For investors based in the United Kingdom, today's news carries immediate practical significance. Accessing individual equities listed in Hong Kong or South Korea has historically required opening a specialist international brokerage account, navigating foreign exchange fees, and dealing with different settlement timelines and tax reporting obligations. With xStocks now covering UK equities and simultaneously offering British users access to Asian markets, those barriers are substantially lower. A retail investor in Manchester or Edinburgh could, in principle, hold London-listed shares alongside Korean technology stocks and Hong Kong-listed firms within a single crypto platform. That said, UK investors must take note of the Financial Conduct Authority's evolving position on tokenized securities. The FCA has been developing its digital securities framework actively since 2024, and the rules governing what is permissible for UK retail users can change. Payward's decision to include the UK in this rollout suggests confidence in its regulatory compliance, but independent due diligence remains the responsibility of every individual investor. The specific choice of Hong Kong and South Korea equities is not arbitrary. Hong Kong's exchange lists major corporations with significant China exposure, making it a gateway for investors wanting access to Asia's largest economy without the direct complications of mainland Chinese markets. South Korea, meanwhile, is home to globally critical companies in semiconductors and consumer electronics, including some of the world's most closely watched exporters. These are sectors that directly influence global supply chains and technology cycles. Beyond the companies themselves, South Korea has one of the highest rates of retail investor participation in financial markets of any country in the world, with a large share of the population already actively engaged in equities trading. Introducing a crypto-native tokenized equity product into that environment could find a receptive audience. Hong Kong's regulators have also maintained a comparatively open posture toward crypto products in contrast to mainland China, making it a strategically sensible entry point for this kind of expansion. Not everyone is celebrating this development, and a balanced assessment requires acknowledging the genuine risks involved. Regulatory uncertainty remains the most significant concern. The rules governing tokenized equities differ substantially across the UK, Hong Kong, and South Korea, and a product structure that satisfies one regulator may raise questions with another. There are also custody questions. If the entity holding the underlying shares were to face insolvency, the protections available to tokenized stockholders may differ significantly from those available to investors using regulated brokers covered by formal compensation schemes. Critics also note that tokenized securities blur the boundary between crypto assets and regulated financial instruments, a gray area that multiple regulators globally have signaled they intend to clarify. Payward's $600 million acquisition of REAP in May 2026 demonstrated the company's commitment to building serious financial infrastructure, but larger scale also means larger regulatory exposure. Informed caution is the appropriate response, not blind enthusiasm. Zooming out, today's xStocks expansion is one chapter in a longer strategic narrative. The $600 million REAP acquisition completed in May 2026 was focused on stablecoin infrastructure. The GTN partnership announced today adds tokenized equities across 3 major markets. Taken together, these moves suggest Payward is building toward a single unified platform where users can hold crypto assets, stablecoins, and tokenized shares from global exchanges, all in one place. That vision directly challenges not just crypto competitors but traditional financial services firms, including retail brokers and, potentially, high street banks offering investment accounts. Payward's speed in executing this global rollout, covering 3 geographically distinct markets in a coordinated announcement, indicates that the underlying infrastructure has been under construction for some time. The company is clearly moving to establish market position before competitors close the gap. Whether that lead proves durable will depend heavily on how regulators in each market respond over the coming months. In the near term, there are several developments worth watching closely. Regulatory responses from the FCA, the Hong Kong Securities and Futures Commission, and South Korea's Financial Services Commission will be the most consequential variable. If any of those bodies introduce restrictions or require product adjustments, Payward may need to modify xStocks for specific user categories or pause certain market access features. Conversely, if regulators move to formally accommodate tokenized securities within updated frameworks, which several jurisdictions have been moving towards since 2024, xStocks could see rapid user adoption. Competitor responses are also likely. Other major crypto exchanges and fintech platforms will have noted today's announcement and may accelerate their own tokenized equity plans. The broader trend, crypto infrastructure absorbing products that were previously the exclusive territory of traditional finance, is a structural shift rather than a short-term news cycle. What is uncertain is the speed and the regulatory shape of that integration over the next 6 to 12 months. Here is the clearest conclusion from today's announcement. Payward's xStocks expansion to Hong Kong, UK, and South Korean equities is a significant, large-scale development that marks a new phase in the convergence of crypto and traditional financial markets. This is not a prototype or a regional test. It is a coordinated global rollout covering some of the world's most important equity markets, launched on a single day. If you are a retail investor in London, Seoul, or Hong Kong, the infrastructure available to you is changing. Tokenized stocks will not replace conventional investing overnight, but they are creating meaningful new access points that simply did not exist 2 or 3 years ago. The question is no longer whether tokenized equities will become a serious part of mainstream investing. The question is how quickly regulators, competitors, and investors themselves will adapt. If you want to stay ahead of those developments, subscribe now, and share this video with anyone who is serious about understanding where global finance is heading.